This video is about IFRS 17 and data and architecture. My name is Brian Birch. I've done a load of Solvency 2 projects and 3 IFRS 17 projects with KPMG, with Moody's and with Aptitude. When thinking about data and architecture, it's important to figure out what outputs we need from IFRS 17 and can the data and the architecture cope with all of that at the various points. We need to understand when the data is available. We need to understand where the data may come from, what file format or text format come in, but also what form will it come in a financial sense. Will it be discounted or undiscounted if it is a cash flow? Then the data will need to flow in through different systems and through different processes. It is very important to know what they are and what is in the architecture already, what is in place and what will be in place if our software for IFRS 17 is going to be bought or built, and are there any remaining gaps where there needs to be an ad hoc process or something to make that work. This may or may not be in the context of bigger finance transformation programs. Now, the architecture, there will be existing architecture, there may be a finance transformation architecture, there may be IFRS 17 software coming in, it may or may not be cloud-based, and there may be an international dimension to it all of who uses what general ledger, what software is around, what are the sources, what are the different books, what are the legal entities involved, and international rules, treatment, etc. So there can be quite an interesting or complicated web of legal entities, books, sources, architecture, and general flows from source systems to tidying up the data, to actuarial systems, accounting systems, reporting systems. It's important to understand what the process is and where there are gaps, where there are issues, what is needed. I guess another aspect is it all built yet? If your company is in the process of buying IFRS 17 software or building it, there's a whole area to think about there about what are the requirements and what are the reports, what are the source systems, and what are the changes that need to be made, and is the potential software compatible in various ways with the architecture you have. Aspects of the operating model to consider for IFRS 17, including the locations of the various business units and the technology, the costs involved. Do you want the lowest cost? Do you want to get the best possible technology? And what are the cost implications for that? The technologies themselves, is it cloud-based? Are you using Oracle? Are you using other types of technology? Do these need to be consistent, or are you able to mix and match? What are the skills needed for the different people involved? Do you need a lot of business analysts, a lot of different types of accountants, actuaries, etc.? And is technology reducing the reliance on some of these roles? For IFRS 17, there are a lot of processes involved. There's a lot of data coming in. There are policy admin systems involved. There's actuarial work to take in the cash flows, to understand them, to discount them potentially. There are accounting roles involved. Take in all the numbers, put them in the right accounts, label them up, make sure you have all the information, do some checks. There are various reconciliations that need to happen in an accounting sense, and you may need a sub-ledger for a lot of detail and a general ledger for the summary that needs to balance overall. There is a lot of reporting that is needed for IFRS 17, both internally and required by the IFRS 17 standard. Auditors will require their proof that the procedures are correct, that things balance, and that the right information is used in the right way. Systems-wise, there will be policy admin systems, actuarial systems. There is likely to be an IFRS 17 calculation piece that could be part of actuarial systems. It might be standalone. It might be part of accounting systems or something that is built itself. There may be a sub-ledger on a general ledger for different levels of information, and there could be a separate reporting system or use of the current reporting systems. In terms of data, there are policies, reinsurance contracts, general needs for data. There are particular IFRS 17 requirements, such as separating assets and liabilities, reinsurance, new business, and things like that. All of these things need to be tracked and need to make sure that the processes, systems, etc. Work for the IFRS 17 requirements. In reporting, there's a working day timetable where you need to understand when the data is available, whether the actuarial model needs to be run, what is required, You need to understand how all the different parts, processes, people, data interact to be able to produce the right information at the right time. It also needs to reconcile to other types of reporting, such as Solvency II, Lloyd's reporting, a UK GAAP, US GAAP, whatever is required. And this can be very complicated, so a system to reconcile, etc. may be needed. In terms of complexity, there are changing requirements for the IASB. Recently, it has changed the rules on how inwards and reinsurance losses are going to be matched. The software may be updated. Whether the software copes with VFA, etc. is something that needs to be tracked. There can be gaps and issues in timing and risks involved in all of this. They need to be tracked. The various parts of it need to be communicated, what we intend to do, what are the risks when certain releases or stages are effective. And there may be tests and proof of concepts for the various aspects of the overall solution. The IASB has changed its view of how inwards and reinsurance losses will be matched for IFRS 17. This means that there could be a much better match. That's very good in many ways, and yet project managers will need to assess what has changed because of this. Do they need different data? Are they linking inwards and reinsurance in any different way? Does the separation of reinsurance need to change in some way? How does the reporting change? How does the data, the reporting and the processes change because of this change of rule? Even if it's a good thing, it may involve some changes at the project level. From an IFRS 17 point of view, some of the things that you will be reporting on are the liability for remaining coverage, the loss component, and the liability for incurred claims. There's an insurance contract liability, and here we're thinking about future cash flows, risk adjustments, and contractual service margins. All of these have accounting meanings. All of them have their own numbers and accounts and building blocks to go into these. They may have time periods, discounted or not discounted, and there are structures and processes that need to be in place. Most of that will probably take place in the IFRS 17 software or in whichever piece of software that may already exist that is going to do that job. The finished product needs to be able to analyze the output numbers by whether it's onerous, roughly loss-making or not, whether it's new business, whether it's inwards business or outwards business, whether it's assets or liabilities. So there's quite a bit of breakdown and data that is needed for all of that, and it's very easy to just say, yes, this piece of architecture, this system can do something, but it needs to be able to do it in these sorts of ways, to be able to produce these numbers. And there is a variety of measurement models, and whatever is needed for those needs to be supported by the various aspects of the architecture. A few other points on software. The requirements, it should be clear. I would expect by now that companies would have analysed that, but that it's possible that's ongoing. What is needed for IFRS 17? What is the model that's going to be used? What is the IT data and process and architecture that is going to be used, the future state, and what are going to be the processes and what are the gaps? Also, priorities may play a part here. As an accountant, I tend to think that the accounting things need to be done well and done in the proper way, but obviously IT people may go, no, well, this is the architecture that we have that's very important for strategic reasons. There may be a cost element of doing something using existing architecture as much as possible. There may be international aspects of different companies, different legal entities and countries wanting to use their way of doing things or their general ledger or their software in certain instances. So there can be different aspects that need to be either prioritized or collaborated on in order to get an effective result. There's a dimension view of all of this, looking at legal entities, looking at currencies, business units, books or types of business, and then in an IFRS 17 senses, portfolios, cohorts, and onerous groups. These are ways of breaking down the policies and the liabilities and essentially understanding them in ways that are relevant to the IFRS 17 reporting. The reports at the final end relate to financial performance. They also relate essentially to a balance sheet and disclosures, understanding what's needed, how it needs to be broken down in terms of building blocks or liabilities or other ways. And that's important, and it can be a way of checking, can we do these reports by using this particular architecture, or is another piece of architecture needed, or a different piece of architecture needed. We also need to think about periods, scenarios, tests, use cases, and the measurement model. So the different ways of thinking about the sorts of ways we're going to use the data and the architecture, and is it essentially we're testing it in a way of, is a particular model fit for purpose, and use case is a way of doing that, taking an example and being able to push it through. Proof of concept is a way of testing, will software work? So it's a way of, in tangible ways, test some of the conceptual architecture and ways of thinking to make sure that it does what we think it will do. In terms of the team, there will be an accounting group of people. There'll be people who think about the processes, which maybe the same sort of people. There's actuaries, data and systems people, and the project managers and business analysts. So there's quite a variety of people on the team, and in terms of them working well together, I would hope that there'll be shared understanding, that we know what we mean by certain terms, that as one person learns, some of that knowledge is shared, that technically the right answers are given, that a report is one that would meet all the requirements for IFRS 17, and that there's the right level of collaboration and communication to make sure that the wheel isn't invented and there aren't very inefficient ways of doing things just to get around some personalities. So there's some great ways of getting the knowledge together and getting a group of people together and potentially moving on with quite a complicated process and project in IFRS 17, involving a lot of different aspects of the company, and then being able to produce and show those results to the CFO and to the outside world, the shareholders and stakeholders. So there's a lot that needs to be done right, but by looking at each part and doing it well, it's quite possible to do that.